Happy Monday, beautiful people. This is Samson Williams from Axes and Eggs. And today we're going to kick off this week with a summary of Facebook's Libra coin. So buckle up. It's about 5 or 7 minutes about this because we actually want to talk about it. 5 quick bullet points for the benefit of everyone. So number one, the technology works. Let's skip that conversation. Doesn't matter if it's DLT, doesn't matter if it's blockchain, doesn't matter what you call it. You can call it spaghetti. The technology works. So we see it with Bitcoin, we see it with Ethereum, we see it with Litecoin, we see it with Ripple or EOS or Tron. The technology conversation, let's not beat that dead horse. Technology works, blockchain / cryptocurrency technology works, so we know we can skip that conversation. It'd sort of be like arguing over how an atomic bomb works. It doesn't actually matter. What matters is who decides to drop it. Facebook has decided to drop the atomic bomb of money onto society in 2020. So what does that actually mean? This brings us back to this amazing concept number 2 of privately minted money. Facebook says they're claiming the right to create money out of thin code. What's money? Well, we're all about to learn that money is actually a record of debt. And so we're not going to argue that, but they're saying we can print money as a private corporation as much as we like, because right now there is no cap on how much Libra coin will be printed or minted from Facebook or from the Libra Reserve or Foundation. So number one, the tech works. Number two, they're going to print as much money as they feel inclined, because by the time the regulators figure that out, where will it be? I don't know. They'll have a lot of money. Which leads us to the golden rule. And the golden rule is pretty simple. He with all the gold makes the rules. What does it look like when a private organization decides to mint money? I don't know. We haven't seen this since the Hudson Bay Company in the 1700s and the Dutch East India Company, also in the 1700s when they were in India. They also printed their own money. What happens when the golden rule is implemented by Facebook, which is a large multinational company based, Libra will actually be based out of Switzerland? We're about to find out, because the golden rule is really more about political power. Remember, the golden rule is he with all the gold makes the rules, and this is actually all about political power. What kind of political power will Facebook have in the future? I don't know. Right now, we see that they have the ability to move elections. What happens when you actually have the ability to transact or to mint your own monies for elections? Let's talk about that in a minute. Bullet point number 4, operational efficiency. Operational efficiency of Libra coin is really simple. Why isn't sending money as easy as sending a meme or a text message or directions? And as cheap. So when we talk about operational efficiency of Libra coin, Facebook says we have a platform for communications where you can send anything globally like that. So when we talk about the operational efficiency of Libra coin, this is number 4, is for you banks and financial institutions out there. You should really be concerned about this. There's an organization called FIS, Swift, Ripple, what's another one? Western Union. We're going to put correspondent banks up here. Correspondent banks, as well as a variety of other financial institutions that currently play a role in global commerce and remittance. They do the back of the house operations. And so what Facebook and Libra coin are going to do, they're going to disrupt those operational efficiencies, those inefficiencies that are currently baked into the banking and remittance system, particularly as it occurs to FIS, Swift, Ripple. Well, Ripple is really not there because they're about to be obsolete. Western Union, and of course correspondent banking. Because again, why isn't sending money as simple and easy as sending a text message, or in this case, a WhatsApp or a Facebook Messenger? That's the operational efficiency that they're attacking. First from retail banking, then it will bleed into corporate banking, which brings us down to the World Bank and the IMF. Why does the World Bank and the IMF care? Well, it actually goes pretty simple. A private company is claiming the right to mint money. A Swiss-based private company, Libra Reserve is based out of Switzerland, is claiming the right to print money, to mint money. The World Bank and the IMF are going to care because this gives them a lot of political power. And there are lots of efficiencies that will come out of the Libra coin, particularly around transparency and accountability. That whole ledger, that whole record that DLT, that distributed ledger slash blockchain technology provides, you'll be able to see where this minted money, however much they want to mint, they'll be able to distribute it to actually shape global policy, particularly amongst startups and entrepreneurs. We have a separate conversation about what will Facebook's Libra coins impact be on crowdfunding, particularly in the equity and debt crowdfunding markets, as well as things like international aid. Whenever there's a hurricane, some kind of natural disaster, if you want to send money somewhere, you can now, through geofencing and airdrops, Facebook will be able to airdrop money directly to impacted areas. But they will also be able to directly airdrop money to political parties wherever they happen to be. Never had that capacity before, so it's going to be very interesting. So in general, Facebook is going to challenge a lot of the existing infrastructure. So if you're a bank, number one thing you want to do, if you're a bank, or if you're a financial institution in general, is this. You want to ask yourself, who within my organization deals with policy? This is called your blockchain policy. I don't know how to spell blockchain, it's funny. Who deals with your blockchain policy? Who deals with your blockchain partnerships? And last but not least, who deals with your blockchain, we're going to call this possibilities. So, let's make this look a little bit prettier so you guys can really drive home or really understand why this is such a big deal when we talk about these three things. If you're a financial organization or a bank, even if you're a mortgage lender, we're going to have a separate conversation about the future of Facebook as it impacts millennial housing and the home buying experience. If you don't have a blockchain policy person, can't say a man, just a policy person for these three things. How do you understand what blockchain is? How do you understand the new and emerging and exotic instruments that are coming out of the space? I don't know. Well, rather you don't know. I know. But you actually need a policy person, a blockchain policy person. The next is partnerships. Right now, the Libra Foundation, they have, I believe, around 70 partners who are collectively forming a new tribe so they can roll into a nation state, because it's all about that political power, because they're about to mint a lot of money. Are you part of that partnership? Are you on the fringes of it? Are you with the cool kids? If you don't have a blockchain partnership person, you're probably behind the curve, and you're going to find out too late. Last is blockchain possibilities. There are many instances where you don't know what's possible until it's too late. And so while you might have been ignoring cryptocurrencies, while you might have been ignoring blockchain, you can't ignore the operational efficiencies that a huge company like Facebook actually brings to the market. Because these operational efficiencies, this speaks directly to the possibilities. What does the possibilities of blockchain and privately minted money actually mean to your organization, to your business, to your industry? We're all about to find that out rather quickly, because really it's a very interesting juxtaposition between a company who has questionable data privacy issues now wants to have transactional data as well. There's one step further into this transactional data. We'll introduce this term called haggle data. We're going to make it a hashtag. Haggle data. You don't know what this is, we'll explain it into another video. But for the moment, here are those 5 bullet points that if you're a bank, if you're a financial institution, if you're thinking, why is this important? Why do we care about this communications platform, this social media platform, what they're up to? It will have profound effects like you've never seen before. Because I like to say, banking is a verb, banks are nouns, banks are optionals. So if you have a cell phone, you actually have a banking mechanism in your pocket. Because when we say people are unbanked, we mean they're not the bank's customers, but they're a cell phone customer. and they probably are Facebook customer as well, because Facebook has around 3 billion people. So that's it for the moment. We'll talk about Haggle data in another video. My name is Samson Williams. If you have any questions, drop them down below. Shoot me an email. Visit me at axesandeggs.com for any additional questions or follow-ups. I will see you in one of our trainings around the world. If you're in New York this summer, I'm teaching at Columbia University. We're going to talk about this in detail and in depth. And so it's going to be a very exciting time for everyone, particularly if you're in the banking and finance world. So that's it. Thanks for watching. Thanks for sharing. Peace.